Hello everyone, welcome back to Accounting with Oscar. Today we're gonna be looking into the last part of the February-March 2025 IGCSE Accounting Paper 2. So the last question of this paper actually focuses on clubs and societies. Now this topic is, again, it's a love-hate topic, but if you're able to understand how the financial statements of clubs and societies work, it's actually pretty straightforward, pretty simple, right? So before we glance into this, let me just give you a simple briefing on the accounts of clubs and societies. So first of all, we have to understand that clubs and societies, these are actually non-trading accounts, right? They are not focused on profits. Instead, they are focused on other objectives. So for clubs and societies, we do not prepare an income statement per se, but what we do is we're going to replace the income statement with the income and expenditure account. So we're going to list down all the sources of income and all the expenses for the clubs. And at the end of the day, we come to a surplus or a deficit for the year. So we don't consider this to be net profit or net loss because we're not really a trading organization. We don't look into profits as much. So if we have extra money, that becomes our surplus. But if we do not, then it becomes a deficit. Now, these surplus or deficits, they are usually added to this account called the accumulated funds account. So what is the accumulated funds account? This is simply the capital account of a trading organization, all right? So a trading organization, you call it capital, we call it accumulated funds. So any surplus or deficits for the year would be added to this accumulated funds. Right, so besides this, we also have a receipts and payments account. So the receipts and payments account of a club or society will record all the monies in and monies out of the business. So to make it simple, this is actually the cash book of a trading account. Of a trading business. So for us, we don't trade. There's no buying and selling. We don't prepare a cash book, but we do prepare a receipts and payments account. Right? So these are the main differences you would see in clubs and societies. Other than that, everything is prepared as normal, right? Financial position is prepared as normal. So usually for the topic of clubs and societies, we don't only focus on the receipts and payments account, the income and expenditure account, but we also look at cases of accruals and prepayments in terms of subscriptions. So members, they pay subscription fees to enter the club. Sometimes they pay more, sometimes they delay payments, and that's where you have to record the accruals and prepayments. Well, we're going to see everything in a short while, so let me bring you to the question. Question 5. The ABC Piano Club provides facilities for its members. It also runs a coffee shop where members can buy hot drinks and snacks. So there's two parts to this clubhouse. All right, there's a piano club and there's also a coffee shop. Now this coffee shop is pretty obvious. This is going to be a trading business because you are buying and selling coffee, right? So definitely there has to be some profits there. So the coffee shop would be a trading business. We're going to look into all that in a short while. So the club's assets and liabilities were as follows. You have it in 2023 and 2024. Your pianos at cost, the accumulated depreciation of pianos. We have subscriptions received in advance. right? So members are not paying for the current year, they are paying for next year. They pay in advance. So the subscriptions in advance will become your liabilities, right? You owe them the membership. Then, of course, we have subscriptions in arrears. Arrears means they are owing you the subscriptions. You have the rights to collect the money from these people. So these are your current assets. Right, then you have club insurance paid in advance. So you are paying this is your expense. When you pay for insurance in advance, this becomes your asset. You have not consumed it, but you make a payment first. Then, of course, we have club rent paid in arrears. So rental has been incurred, you have not paid it, it becomes your liability. Then we have our coffee shop inventory, so that will relate to the coffee shop. Trade payables for coffee shop supplies, again related to the coffee shop. And finally, you have your cash at bank, and these are debit balances, so they are actually positive. You have money. Alright, so that's it. Pretty straightforward information as long as you know how to interpret them. So the first requirement is to calculate the accumulated fund at 31st December 2023. So they want you to calculate the opening capital. I put it in open inverted brackets. So opening capital, because accumulated fund is the capital of a trading business. So how do you normally calculate capital? Well, usually you use the accounting equation, right? So assets equal to capital plus liability. So if I want to look for capital, I would shift everything to the other side. So capital bring over, asset bring over. So you're going to get assets plus become minus liabilities. Right? So capital equals to assets minus liabilities. That is how you're going to find the accumulated fund. So I'm going to put two columns here, and I'm going to start with assets, right? All the assets that I have. First off, I have my pianos. So I can straight away put pianos at book value. I don't need to do double rows for that. I don't have to put pianos at cost and, put another row for provision for depreciation. I could just sum it up into one. So pianos at book value gives me $7,200. Now I put it in the left column, because I'm going to do a subtotal on the right. So the next item I have, I've already remarked. So subscriptions in arrears, 390. Moving on to insurance in advance, 140. And I also have my coffee shop inventory, right? My stock is also my asset, 320. Trade payables, I owe them money, so this is more of a liability. Cash balance, yes, that is a positive. So cash at bank is 2045, right? I bring in all the assets that I have. So this leaves me with total assets of $10,095. Right, one part of it is done. The next part here, I'm going to bring in my liabilities. So, you can just continue. You don't have to leave a line. I do it because I want things to look a bit neater. Sorry, I have this OCD thing. So, Alright, liabilities, what do we have? We have our subscriptions in advance, 650. So same thing, gonna put it on the left because I'm gonna do a subtotal. I also have rent in areas, 435. Right, and trade payables, 200. Oops, almost on the dot there, almost out of space. Don't worry, we should have enough, right? Let's do a sum up. 650, 435, and 200. That is 1,285. So remember, the formula is to take assets minus liabilities. So we gotta put a bracket there, and it's okay to go out of the line. It's all right. The markers will still continue to mark. Don't worry, they're not gonna neglect your answer there. So 8,810. That is the accumulated fund at 31st December 2023. There is your 4 marks. I know, right? All that for 4 marks. Looks like a lot of work. Yes, it is, but you only get 4 marks. So it's alright. At least we got 4 marks, right? We are safe for now. Alright, so that's how you prepare a statement to calculate the accumulated funds. I mean, you could just plus and minus, but this when I do a statement, I let myself see things a bit clearer, so I don't miss out on anything. But if you want to do a plus minus equation, that's totally fine, right? So let's move on. Let's bring you over to the next question. Now, the following totals have been taken from the club's receipts and payments account for the year ended 31st December 2024. So when they mention receipts and payments, this is all your cash in and your cash out for the year. Actual money paid out, actual money received in. So subscriptions received, 7,008. Coffee shop sales, 8,320. You have your club rent and insurance payment, other club expenses, payments to your payables, as well as coffee shop wages. So there we go, right? We just mentioned this thing about accruals and prepayments not too long ago. So here's where we're going to put it in practice. Prepare the subscriptions account for the year ended 31st December 2024. Balance the account and bring down the balances on 1st January 2025. So, one thing I always do, start with the opening balance. So, subscriptions in advance is a liability, is going to be on the credit side, 650. Subscription in areas, they owe you money, it's going to be on the debit side, 390. So I'm going to park that in first, 650, 390. This is on the 1st of January 2024. We're going to label this as balance brought down. Now the next part, what other information do I have relating to subscriptions? Well, I have the closing balances, right, for 2024, but I don't think I'm going to park that in first. Let me see if I can find any other information. Well, not from here. Let's look at this one here. Ah, yes, I do have one. Subscriptions received. Money coming in. So double entry, debit my bank, asset increases, credit subscription to recognize income. So I'm going to credit subscriptions account, 7,008. And this is bank, right? Payments coming in. So I believe that's all the information I have, so I'm going to park in the closing balances. In advance 715, in arrears 325. In advance, right? So I owe them is going to be on the debit side. So I bring it over to the credit, and in arrears would be my asset. You're gonna put the carry down on credit, bring it to the debit. Okay, so these are all the balances carried down. You notice I left an empty spot there on the debit side. So that empty spot is for me to fill in the balancing figure, right? How do I know it's on the debit side? Well, pretty obvious, right? Credit is much larger, so there will be a certain item here. But I can't put balance carry down here, right? It has to be the last item. So I'm going to leave a gap for this, and I'm going to do my calculations now. So the total of the credit side is 8,775. That's the larger total. So I'm going to minus 390 and minus 715 to get 7,670. Now, tell me, where do you think this is gonna go? Well, this, my fellow students, will go to the income and expenditure account as the actual subscriptions earned for the year. Now, this is not the actual you receive. The actual money you receive is 7,008. But 7,670 is the total that you have earned, right? Notice the difference. This is what you earn, right? What you earn is not necessarily the same as what you receive, because some people may pay you in advance, some people may owe you the subscription, they may drag on to the next year. So do take note of the differences, and you should be alright. So the only thing left to do here is to bring in the opening balance, right? To park it down to 2025, January 1st. So balance brought down on the credit is 715. Balance brought down on the debit is 325. So I hope you know how it works, okay? So the balance carried down will always go into the opposite direction. Okay, so are we all good? If you have any questions, feel free to leave them down in the comments below, and yeah, don't worry, I'll read through every single comment. I don't think I'm gonna get more than 5, so yeah, if you have any questions, leave them down below. Right? Now, part C of the question, prepare the club's rent and insurance account for the year ended 31st December 2024, balance the account, bring down the balance. So it's the same thing, you see. It's the same thing that you're doing, except you are dealing with rent and insurance now. So rent and insurance is your expense. Therefore, okay, it will be a little bit different from what we've done earlier, because the subscriptions account are more of an income account, right? But for rent and insurance, this is an expense. Well, regardless of that, okay, let's try to work it out. Let's go back up to the information. We have separate information for insurance and rent, so we're gonna park them into one account. Club insurance paid in advance, this is your asset of 140. Rent in arrears 435 would be a liability. So let's bring that information in, right? So 140 would be an asset, 435 would be a liability. And let's park the dates here. January 1st, this is your balance brought down. January 1st, this is your balance brought down. right? So that's what I always do. The first thing is always sort out the opening balance. That's the easiest part. So for the next part, we're going to look at some other information regarding rent and insurance. Do we have anything up here? No, we don't. Right, let's look at the one below. Anything related to rent and insurance? Yes, there is a payment. So money going out. Your double entry is to credit bank to reflect money gone out, and we will debit the rent and insurance account. So let's go to the debit side and park in 6,700. So this is the bank money going out. So with no other information on rent and insurance, I believe I'm gonna park the closing balances. So insurance in advance is 155. But there are no rent in areas here, so there won't be a carry down for rent. We are just going to have a carry down for insurance in advance. So I'm gonna park that on the credit side. 155 balance carry down, and you will be very familiar now why I left a space in between, because that's where we are going to calculate the charge to the income and expenditure account. Okay, by the way, I think I've forgotten to park in the Decembers. Oh, okay, that's only, yeah, I think there are a few I've forgotten to park in the Decembers. So yeah, let's just make sure everything's parked in, because you don't want to lose one mark on your dates. Yeah, make sure to park in your Decembers, okay? Otherwise, Taylor Swift's gonna be very sad. Okay, so let's do our calculations here. 140 plus 6,007, obviously that's the larger balance here. You get 6,840. So let's minus off 435 and also 155. Okay, so you get 6,250. That will be the charge to your income and expenditure account. Yeah, don't forget the balance brought down. Don't want to lose one mark there. So that's it. Pretty straightforward. Just have to fill in all the information. Start with your balance brought down. Move on to any information on bank payments. Fill in your balance carry down. And the difference there is going to be the charge to your income and expenditure account. And there you go. Another 5 marks earned. So for the last part of the question, we're gonna look into the preparation of an income statement, right? Preparing the income statement for the coffee shop for the year ended 31st December 2024, right? So no theoretical questions for this one. We're just gonna look into the income statement, right? That's the last part. So for the income statement of the coffee shop, we're gonna focus on elements related only to the coffee shop. So I'm gonna start with sales. Let's go back up to find that. Okay, there you go. Coffee shop sales, right? Coffee shop sales, we have 8,320. Let's bring that in. So I have my revenue of 8,320. Since this is a trading business, I will have cost of sales. So opening inventory plus purchases minus closing inventory, right? I didn't see any purchases return. I didn't see any carriage inwards. So these are the only information I might have. So let's search for opening inventory, right? Where's the opening inventory? There you go, right? 2023, $320. 2024, $382. Let's plug that in. 320 and 382. 320, 382. Alright, now the only thing left is the purchases figure. Do I have any purchases for the coffee shop? Oh no, actually I don't. Right, I don't have the purchases for the coffee shop, right? I don't see any purchases here. And I don't see any purchases here as well. Okay, that's where the trick is, okay? For this question, we have to calculate the purchases using whatever information we have. So the first information that we have here related to the coffee shop purchases, first of all, trade payables, right? 3,815. Second of all, the opening and closing payables. So you have the payments and you have the opening and closing payables. Can we calculate something out of this? I believe we can. So I'm going to use a ledger here. I'm going to make this very simple. So my opening trade payables, I have 200. Let's bring that in. Sorry, it should be on the credit side since they're a liability. So I have my balance brought down of $200. Balance carried down is 186. Since I'm doing a draft, I don't really need to have everything in order. It's just a draft, right? So balance brought down, balance carried down. Let's park the payment to my payables. How do I record this? Money goes out, so credit bank, debit, the payables. 3,815. Okay, let's see if we can find something out of here. So 3,815 plus 186 minus 200. That gives me 3,801. This is going to be my figure for purchases. So the total figure for purchases for the coffee shop is 3,801. So you see a little bit of incomplete records here, huh? So it's not just a club question, but they incorporate this incomplete records. Okay, are you surprised? So let's figure out how this is gonna work. 320 plus 3,801 minus 382. So we get 3,739. I mean, let me know if you're interested in seeing, videos on incomplete records. Probably I'll do something about that because a lot of my students right now, they suffer from incomplete records because it's been a very neglected, it's actually a very underrated topic in the IGCSE syllabus. I mean, if you actually analyze, right, like deep analysis into the past years, incomplete records was never a popular question. It was never a popular question, not in the 2000s, not in the 2010s. It was not a popular question until recent years where we begin seeing, like in 2024, for example, the October-November sitting, we see a full question. A full question, 20 marks on incomplete records. So I believe this is probably a sign, a trend that, it's making a comeback. So yeah, if I were you, I would put a little bit of focus into incomplete records as well. Yeah, let me know if you like some videos on that. So anyhow, you're gonna get your gross profit here for the coffee shop. And we're gonna complete the second part, right, of the profit or loss section. I believe there are no other income, right? Should be no other income here. So do we have any expenses for the coffee shop? Yes, we do, right? We have some coffee shop wages here for 2,600. So that's related. Let's bring it there. Since I only have the one, I will probably just put it directly. I'm not going to less expenses and move a column down. I'll just less wages here. So I end up with $1,981, right? This is the profit for the year. Now you can use the word profit here because this is the coffee shop. It's not the club. If it's the club, then you would have to rephrase your words. You have to label this as a surplus for the year, right? And if it's a club, you wouldn't even be preparing an income statement. You'd prepare the income and expenditure account. Well, with that said, congratulations, we've come to the end of the February-March 2025 accounting paper 2. We have done it at last, right? We've completed the paper. Well done. Bravo to all of you. So thank you all for sticking by for this commentary or review or analysis, whatever you call it. It will be it will be a lot of motivation if you like, share, subscribe this video, right? And for the next discussion, I'll probably be talking about something else, or maybe I'll be sharing some of my archives, right? Who knows? So until the next project, I'll see you all soon. Thank you so much for tuning in to this commentary for the February-March 25 paper, and I hope all of you do well for your May-June sittings. And yeah, come and update me if I've helped you in some way or one way or another, right? Thank you very much, and I'll see you all next time.